Hello traders, this is Fawad Razak, Solar Market Analyst for City Index. Today is the 24th of January 2024. So global equity markets are on the rise, and this is helping to push the dollar a little bit lower ahead of the ECB rate decision and US GDP and Core PCE price index later in the week. I'll come back to the equity markets in a minute, but let's start off by looking at the euro dollar. So the euro dollar has recovered back above the 200-day moving average after a brief breakdown below it the day before, which is a potentially bullish signal. It still needs to break a few areas of resistance, including this 109.35 level, which was the base of the breakdown from last Tuesday. But the reversal that we've seen today, if it can hold into the close, is potentially a bullish signal. So if we see some weakness in US data later this week, then this could further extend the recovery in the euro dollar, potentially paving the way for a run towards 110 and possibly beyond that. The ECB is unlikely to cut interest rates at this meeting. It looks like June could be the meeting where the central bank could cut interest rates, because right now inflation is a concern for ECB and its governing council, with wage pressures remaining high. If the ECB appears to be more hawkish on Thursday, then this could help to underpin the euro dollar. Otherwise, if the dollar comes back strongly and goes on to break convincingly this time below the 200-day moving average, that would be bearish. So the bears would need a daily close below the 200-day moving average at around 108.45-ish. Should that happen, then we could be talking about the December low at 107.25 next. But we'll cross that bridge if and when we get there. Today, we're also seeing some commodity currencies outperforming, like the Aussie dollar, because overnight the Chinese central bank decided to cut the reserve requirement ratio for banks, which is obviously helping to boost equity markets in China. And I'll show you that in a minute. But we've also seen copper prices rise, and when copper rises, the Aussie dollar tends to follow, because Australia is the largest copper exporter in the world, or one of the largest anyway. The Aussie is also testing or trying to hold above the 200-day moving average, much like the euro dollar we saw earlier. So far, it's doing an okay job. What I don't like about price action on the Aussie is these clean lows at around 65.25, which could be a trap for the bulls. And if we see some strength in US data coming in later this week, or otherwise the dollar rallies, the US dollar that is, then we could see a run on the potential stops resting below these lows. So that is the key risk insofar as the Aussie dollar is concerned. So for me to get a bit more bullish on the Aussie dollar, we move above this area on a daily closing basis. For me, that would be the turning point on the Aussie. Otherwise, there is a risk, as I mentioned, for a breakdown should US data surprise to the upside, or otherwise the dollar finds support. So I mentioned the Chinese support, and as you can see, the Chinese yuan rallied for the third consecutive day overnight after the latest support was announced by the People's Bank of China, and this has helped equity markets push higher. And if you can see from the list I've got here, the Hang Seng and the Chinese A50 index, they are the outperformers today, following their recent sharp falls. The China A50 index is now testing this bearish trend line that has been in place for several months, since last July. In fact, if you zoom out, you can see that there's lots of lower highs in the Chinese index. So it still has a lot of work to do to kind of turn the trend in the favor of the bulls. But this week's price action would appease the bulls, because we had this December low, which was raided earlier this week or the week before, and now it's been recaptured. So this is a potentially bullish sign, but we do need to see the breakout hold. So moving forward, this shaded area, I can refine this a little bit further now, could be the next support area to watch on this market. For as long as that area holds, then there's hope that we could see a bit of a recovery in the Chinese equity markets and a catch up with the rest of the major global indices. Speaking of which, if you look at the Nasdaq, for example, it is continuing to post new records. Overnight, we had Netflix earnings coming in better than expected. The stock is up like 10%. Let's have a very quick look at Netflix. As you can see, it's gapped up 12% now. Obviously, there's a risk that the gap could be filled, but we do have more tech earnings today to look forward to, which could move the Nasdaq and other US indices in the direction of the surprise. So what are we looking at in terms of technical analysis? Well, the old all-time high was hit in December, which was this high here. And the previous to that was the October or November 2021 record high, which was this high here. So the fact that the Nasdaq has closed above both of these levels in recent times, and we've seen some further follow-up technical buying, this is clearly a bullish signal. So the path of least resistance is going to remain to the upside for as long as this area holds as support now. The invalidation point for me would be if we move below the low of this candle, which is miles away from where we are at the moment now. But any move below that would be bearish. Short-term support comes in above around this level right here, 17,450-ish, which was resistance in the last couple of days before we have broken above it earlier today. So that's the first line of defense for the bulls to hold their ground. Beneath that, we have this level right here at 17,300-ish. And then below that, there's nothing significant until the high of December. So those are your key levels to watch on the Nasdaq. On the downside, in terms of the upside, obviously we don't have any prior reference points to target from a bullish point of view, but we can draw a Fibonacci extension levels, for example, from this swing high to this low. Ignoring all these retracement levels, you can see that the Nasdaq did hesitate just below the 161.8 extension level in the last couple of days before breaking higher. The 200% extension comes in at around 17,765 and so on. So those are some of the targets that the Nasdaq could aim for before profit taking potentially causes it to reverse because it is looking quite overbought. And if you look at the RSI indicator, the Nasdaq is well above the 70 threshold of overbought territory. So last time it got to above 70-ish, you can see it was in December, and that led to a mini correction. Could we see a similar pattern emerge in the next few days? Time will tell. Now here's another tech-heavy index, the German 40, which is not exactly mirroring the Nasdaq 100, but it is nevertheless finding good support in the last few days, rising above the 21-day exponential and breaking lots of resistance levels. It is yet to break the December high, which was a record, but it's a good sign to see the index holding this shaded blue area, which was the previous highs from recent years. So this shaded area is where I was expecting support to come in, and it has for now anyway. The key support to watch now moving forward is at around 16,780, which was a key resistance level in the past, as you can see by the wicks of these candles. Let's look at some commodities now, starting with copper prices because of the aforementioned support from China. The base metal is above the 200-day moving average after breaking this bearish trend line that had been in place since January of last year. So this is potentially a bullish signal, suggesting that the path of least resistance may now be to the upside. Let's see if the rally can hold. So far, it's looking strong. But if it goes back below the opening price of today's session, that would be a bearish sign. So watch out for that possibility. But it does look like it wants to push higher from here. Here is a chart of silver, and the precious metal staged a rally earlier alongside copper prices, but it's now coming off its early highs. It has found some resistance around the bearish trend line, where we also have the 21-day exponential moving average, which is now pointing lower coming into play. So that's a key area of resistance, which is holding for the time being. Silver needs a clean daily close above this bearish trend line, so a move above, let's say 23, to turn the directional buys bullish after its recent lower lows and lower highs. Finally, gold is not looking as bullish as copper or indeed silver. This bearish trend line is continuing to hold as resistance, as we've seen in the last several days. So gold prices remain basically stuck between a rock and a hard place. Resistance at around 2040 needs to break in order to trigger a move up to the next area of resistance, starting at around 2075. While if it continues to hold as it is right now, then there is a possibility we could see a potential move back down to the 2000 area, which is this blue shaded area where the price of gold had previously found a strong support and resistance. Below that, we have the 200-day moving average at 1965-ish. And then a key major support area is slightly below that, where the 61.8 February trace converges with these previous highs and this level of support. Let's see what happens in the next few days. Obviously, gold has been managing to hold its own quite well, given how strong the dollar has come back this year, which is showing underlying strength for gold. It just needs the dollar to start to weaken again before we potentially see new highs on gold. For more market insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.